just from the sound of my voice, you could hear or smell money
Yes.
in the air.
Yes.
It's every day money matters. And the way the man said yes, he didn't say yes like a poor man.
I'm rich in Jesus' name.
No, all these humble people. Well, you're not the one that I heard gave somebody 1 million naira last week.
In Jesus' name. It wasn't you, but I hope so. It's good to be back. How you doing, Coyote?
Not bad, man.
Yeah.
Not bad.
You know, so
How's the week been so far?
not bad. I'm pushing it.
Have you been trumped yet?
No, well, I've started feeling it, but I'm still waiting for the full force to hit.
It never concerned me until 2 days ago. It hit me hard and like
Yeah.
it was I have a project we're meant to do in Ghana, and one of the CSOs said, they were going to partner, and they actually reached out and said, we like what you did last year when we did the Nigerian Factor in October. Thank you for your support, man.
Yeah,
and
no problem.
they said, we'd like to partner because it's a big project. So we're going to Ghana. We started talking. We said, okay, being truthful people, let's not collect the money now. We need it around April. So we'll come back to you in February so that we can talk about releasing funds and
For
do
us.
the major legwork. We started working on it. I reached out and they're like, guy, one of our major partners gets is it a major part of his funding from USAID. And that is the funding they often use for us. We've started a landmark project this year. USAID funding has been cut. All we are thinking of now is how to finance
the business.
So what about myself? Yours doesn't even feature.
It's not a priority. Don't worry.
Like,
God forgive
you, God forgive you.
I'm pretty sure it will definitely come close to home. And we'll probably talk about it. I think Dre actually spoke about it on his Money Brief on our YouTube page. So I think people should actually go and watch it and understand how the implications and how to maneuver, and that'll be good for people. Anyway, let's not deviate, right? So today we're talking about, how to invest in mutual funds in 2025, the importance of mutual funds and, what the recent yields actually mean for Nigerians. So backed by popular demand, everyone has asked us to bring him back to the studio, and we finally got him. He's a busy man. We have with us Idika Aja, senior financial analyst with Nairametrics, and is going to shed more light on it for us. And we look forward to an enlightening situation. And Idika,
thank
welcome
you.
to have you.
Yeah, thank you, Odiva. And Kayode. It's good to be back.
And
thank you very much.
No problem. So, so for people that don't necessarily understand or know what mutual funds are, can you actually tell us what exactly is a mutual fund and why it's considered a good investment option?
Okay. Actually, mutual fund essentially is a pool of funds from various investors.
Okay.
Which they invest in various asset classes, like treasury bills.
Yeah.
Like treasury bills, commercial papers, equities, bonds, and so on. Now, they are different classifications. Depending on the type of mutual fund, you have money market mutual funds.
Okay.
That is basically on short-term investment, like like treasury bills, commercial papers, FDs, and other things. Then you have equity mutual funds that invest in equities, and you have, of course, bond or fixed income equity funds. So it depends on the ones you want to invest. Okay. So they are basically, you pull money from various investors and invest in various asset classes.
Yeah. Okay, thank you for breaking it down. So, you mentioned money markets, right? Okay. I want to touch on that as well, really. So, because I'm also concerned on the recent performance, and so Nigeria's money market, yielded about 20.58%.
Yes, on average.
Yeah, on average.
Because they have about 38 of them.
Yeah, 38.
So on average, based on the Security and Exchange Evaluation Report of January 24th, the average yield is about that figure you mentioned,
20.58. And I mean, from I also observed this is a massive jump from last year, which was 9 point something.
Yes.
So, what exactly does this mean for the average Nigerian investor?
Okay, the money market mutual funds, one, is a very low risk investment. So, and for you to jump from 9 point something to 20 point, about 21% thereabout, is very, very good for investors. And that means you enjoy a low risk return and actually have a high risk return. You know, last time I came here, we mentioned this risk return variability, which means that the higher the risk, the higher the return. Now, for a low risk investment like a money market mutual fund to give you up to 20% or 21%, that means it is good. And it's really a shift from the normal savings account. You know, Nigerian savings accounts, you get an average of, I think, between 4 to 6%. So recent CBN9 increased it to minimum of 4%. So it is good at least to have that high level of return yield from a low risk investment.
Okay, and that's good. I hope everyone is taking notes. And to add to that, so many Nigerians are facing inflation right now. You know, so with this recent performance, mutual funds 20%, like we've identified, right? Is it a good time, or should Nigerians see this as a good time to hedge against inflation?
With money market mutual
funds.
Well, like you have to really consider what you really want. Like I mentioned, money market mutual funds are low risk investments, and not necessarily that it will bring it will hedge against inflation. I think as at close of December, the inflation was I think about 34.8. Now this January, based on the data released recently, the thing has come down to I think 24.48. Now, having a yield of average yield of 21%, when you look at inflation return adjusted, it gives you negative. You understand? That means it's not really a hedge against inflation. But the most important that is provide you with a steady income. You understand that can even address savings rates, savings yield. So it might not be to say a hedge against inflation unless inflation comes down more.
Okay, so that means it's not 100% hedge.
No. The other asset classes, when you want to hedge against inflation, you can use what we call inflation adjusted returns, like the equity, like the real estate. Now, even among the mutual funds, you have Euro bond and dollar bond, which we actually want to hedge against currency risk. So those ones are the ones you can equally use to hedge against inflation.
Okay, thank you very much for shedding light on that. And I want to also go back to what you said. You said we have 38 in total. So I think 28 out of that, are the ones that really did well. So what risks, should be aware of, within this whole performance and investing towards mutual funds? What risk should investors be aware of, if at all there are any?
Yeah, of course there are. It's only that's what we call the risk asset investments. Normally, treasury bills from government bonds, they are what we call the risk-free assets. You understand? That means whatever comes that government must surely pay. That is why we call them risk-free. Then, when you talk of treasury mutual funds and other asset classes, there should always be a risk premium. That means if a treasury bill is giving a return of let's say 12%, then for you to invest in mutual fund or other corporate asset classes, they must give you a return more than that 12%.
Oh, really?
Yes, it must give you it because you must provide for that premium. That is one aspect before you even talk of inflation. Because the idea that if I invest in treasury bill, you understand, that gives me 15%, which I know that surely I won't get back the money. Then if I'm moving out of that government investment, I'm investing maybe in, for instance, commercial paper from Dangote Sugar, it must give me a return more than that treasury bill to compensate for the risk. You understand? So yes, there is an inherent risk. Which we have a lot of them. What we call interest risk. We have what we call credit risk. That is the default risk. So there are a lot of risks inherent in investing in money market mutual fund. But the most important that it is a low-risk investment, and you have steady income. And besides, you have to note that these money market mutual funds are managed by professionals.
Okay.
You understand? That is the advantage. They are managed by
So that's the confidence we can at least have.
There are diversification there. They are managed by professionals. That means that now, if you buy, for instance, Dangote sugar commercial paper, you understand, there's likelihood that you might have a downside risk. What I mean by downside is that the return you're expecting might not be the same thing.
The same thing.
Or even when you buy corporate bonds, the likelihood of having a downside risk is there. I mean, the return you're expecting, you might not get it. You understand? Now, if you invest in mutual funds, whether especially money market mutual funds, normally it's always good for investors to look at the fund fact sheet, where they now state the details of the funds, the performance, the expense ratio, the
trajectory over time.
Yes, you have to study it. So when you now have it, for instance, Stanbic IBTC money market mutual fund, I think they pay quarterly.
Yeah.
So if you invest 5 million naira, for instance, at the end of a quarter, that's 3 months.
Yeah.
They will now pay you based on the prevalent rates available. You know, rate fluctuates, it can go up, it can come down.
Yeah.
But at the end of that quarter, they will now calculate and say, okay, this is the yield from this 5 million, and they will pay you. You can choose to return or roll over, or you can still to collect your interest and still leave your fund. And the important thing, another key thing there is that with mutual funds, money market, you can redeem anytime. That means if you have an investment of 5 million and you need urgent cash, you can just call them, okay, let me redeem this amount. And you can easily redeem it and pay it back to your account. So these are the advantages he has. But as for risk, he has. I've mentioned interest risk. I've mentioned credit risk, which is default risk. You understand? So there are a lot of risks here. All of them, they have risk. So,
okay, so I don't know if you know this from the top of your head. So if you invested, if you say one invested 5 million still,
yes.
In January, right?
Yeah.
Towards this quarter, right?
Yeah.
Which should be ending March. Can you give projections of how much the person will earn?
No, I wouldn't be able to.
You won't be able to,
because you know, like now the inflation has dropped. Now, if you look at by the time the CBN comes out with their NPR, it might drop because the essence of this increase in NPR is to check inflation.
Yeah.
Now, if the rate drops, definitely it will affect the yield.
Yeah. Okay.
Of your investment.
Yeah,
that's why I said it is interest rate risk. Because it's been the interest rate affects the yield.
Yeah, it's sort of like
interest rate drops, definitely the yield will drop. If interest rate goes up, the yield will go up. So I can't actually say, okay, be able to calculate, okay, this is how much. But I think that's why they said on average.
Yeah, on
average, you have between 20 and something. Remember, these things, they were about 2 years ago, you were about 5% or thereabout. You can see the growth.
Very, very massive growth.
Very massive growth. Yeah. So that's the thing, that's how it works.
Okay. So, thank you for clarifying that.
Yeah, but I think you equally have to note, like I said, the advantage of mutual fund is diversification. You understand? That is a very key thing there. That means when you buy, they can now use that your money and put in different asset classes within that type of mutual fund.
Investments.
Then unlike when you want to buy individually, especially want to buy from the primary market. Let me explain for that. Now, Dangote Sugar issued a commercial paper. I think they started yesterday and it will end tomorrow on the 20th with a discount rate of about 24% or thereabouts.
Okay.
You understand? I think the VFD group issued their own that ended on Friday.
VFD, I remember that.
At an effective of 30%. Now, what this means is that commercial paper, the discount is paid upfront.
Yeah.
You understand?
Upfront,
yes.
Okay.
It is paid upfront. That means if it is 34%, they are 24% they are giving. Now they discount it and pay at maturity, which is almost about 270 days, which is a short term. They now pay you the face value. If it is 5 million, they discount, pay you the discount amount.
Interest.
At maturity, then they now pay you the 5 million. That is if you are investing individually, that you are buying
Individually.
directly from them. Now, that is where these mutual funds, that is where they now push those your money market fund. When they pull it together, they now buy all these commercial papers. If federal government releases issue the treasury bill, they now buy and FD and now combine all of them at the end of maybe a quarter, like Stanbic IBTC. They now say, okay, this is what your investment has given us, and this is what we'll give you. Remember, they'll have to remove their cost
first.
That's why it is very important to look at the expense ratio when you are investing.
So that's why that sheet is important.
Yes, that's why that sheet is very, very important. Yeah, and you have to do that. That is just the difference between investing maybe as an individual, maybe buying primarily, or putting your money in a money market where managers can manage it.
Okay. I understand that better now. Thank you very much.
Yeah.
Thank you very much. And to bring Kayode into, I want to go, into how to invest, in mutual funds. Kayode was saying earlier on, you need to be doing something for God to bless you, for God to bless you, right? As against not having anything, I'm just saying. So, for someone who's listening now, someone who's listening and interested in investing in mutual funds, what steps should the person take, towards investing in mutual funds, like starting?
Starting. Yeah. As a new person, the first thing you have to do, first of all, understand what is mutual funds, which I've just explained.
Yes.
Yeah, you understand what is mutual fund. I've explained it. Where you put a pool of funds from various investors, you understand, for an investment firm or a mutual fund, that are now put it in various asset classes. That is mutual fund. Then it depends on the one you want to go, depends on the risk appetite on what you want to take. When you understand that, then another thing is you have to contact the particular fund you want to invest.
Okay.
For instance, you want to invest in ABN mutual fund, IBTC, as the case may be, you contact them. Then just like you open an account with them.
So you can literally just pick up the phone call?
No, sure. You just browse, check them, they're out there, check them, call them. You can open the account online, or go to the office, open the account. You understand? With normal BVN, normal way you open a bank account, open it.
Yeah.
You understand? But that is one aspect. I mean, if you want to invest in mutual fund, go through that. But it is quite different from, I always said it is always good for at least mature somebody to have a trading account. That is what we call investment trading account, which is different from opening an account with a mutual fund. Trading account means you must open a trading account, whether you want to trade in stock, whether you want to trade in treasury bill, whether you want to trade in commercial paper. You understand? That means you have to open an account with a brokerage firm, a house, a stockbroker, and they'll now issue you what they call Central Security Clearing System number, which is unique, just like BVN.
Yeah.
Most of us, we don't have it. Just like you have a bank account. If you want to go into investment, it's equally good that you have your trading account with your CSCS number.
Yeah.
I will tell you the reason why it is important.
Yeah.
And this one, you just want to give professionals money to invest for you. You sit down, relax, and they'll give you a return.
Yeah.
You understand? That is okay. Now the return is okay. The return is a bit high. That is good for you. But now, assuming you want to trade on your own, I've mentioned this CP now. CP is now, on average now, we have about 24 to 30% yield. And it's a short-term investment, 270, 180 days. Now, if you have, if you have 5 million, but the only challenge, like you said, disadvantage has that, which mutual funds try to correct, is the initial investment.
Yeah. Because
with mutual funds, you can invest as low as 5,000 naira.
I told you.
You understand? You can, when you open account, can expect you. So that is this is one of the things you have to check when you want to select the mutual fund you want to use. What is the initial investment? Some ask you 5,000, some 10,000, some 100,000.
Yeah.
You understand? Now, that is quite different from if you are buying primary commercial paper, like they issue it. I think the minimum is about 5 million. You understand? So if you now buy 5 million at average rate of 24-30%, you calculate it and see what will give you. And this thing is paid up front. And one advantage of this is that you avoid that what we call reinvestment risk.
Okay.
Reinvestment risk is that means once your interest is paid to you, especially bonds, by the time the interest is paid to you, maybe the interest rate might have gone down.
Oh.
Do you understand?
Yeah.
Might have gone down. That means you will now be reinvesting the interest at
Again,
a lower rate.
Rates. Yeah.
So that is the only thing you suffer. But for commercial purpose, you avoid that because the interest is paid to you upfront. You understand? So
you don't,
at that
even
prevailing
as a
rate,
drop,
if you want to invest, you equally invest it at that
point.
At that point, at that rate, if you want to reinvest it.
Which will probably be the higher rate.
So even before the interest rate.
So, but how often does it drop? Is it erratic or?
No, that thing is being controlled by the MPR rate.
Okay.
If the MPR rate is, for instance, is 27%, you don't expect any issue.
Yeah.
So most of them, you understand, they mimic that MPR rate. Even the rates bank gives you loans is based on the MPR.
MPR rates. Yeah, true.
You understand?
True. Okay,
So
it also affects it that way.
That's why we know CBN has been increasing the MPR to fight inflation. Now inflation is a bit that. Let's see by the time they come out, let's see what they have to bring.
Okay, so besides returns, really, what other factors should people consider, before picking the mutual funds? Is it fees, liquidity, manager, reputation, those kind of things?
Yes, I've said it. One is a consistent track record of the mutual funds.
Okay.
You understand? Another key thing is the liquidity. What do you call the net asset value, NAV.
Okay.
Net asset value. So that you know the reason why it is important. Now, if you choose a mutual fund that has a very robust net asset value, I think Stanbic IBTC has the highest, about I think over 800 billion.
Wow.
Over 800 billion. You understand? Over 800 billion. Now, it is that anytime you want to redeem your investment, you can easily redeem it.
Okay.
There will be no issue of liquidity. Okay, maybe we can't. We are trying to do one or two things to get your money redeemed or something like that. So that is the advantage.
Okay.
Yes.
Okay.
Now you probably have to check the fees. You understand the return expense ratio. How much are they charging?
Yeah.
That's another one. Then you equally have to check what is the entry level. That is
the entry level is key.
Is key too. For people, if you have 5,000 naira, some say okay, 5,000 naira you can put in there. 10,000 naira you can start and upgrade.
Okay, so if someone wants to diversify, how do your mutual funds fit into a larger investment portfolio?
Okay, it depends on what you want. Like I said, mutual fund does not provide the right hedge.
Okay. Yes. I remember. We've cleared that.
Inflation terms, it doesn't. You understand? It doesn't, unless maybe the inflation rate. Even if the inflation rate comes down, definitely the interest rate will come down too.
It will come down.
Yeah. So it does not hedge. It does not provide the right hedge.
Okay.
Now, what you have, the other one like equity, you have equity mutual funds. You understand, but for longer term, but even though it has a higher risk, then for currency hedge. Against Naira devaluation, I think you have the Euro bond, you have the dollar bond. Stanbic IBTC, they have those types of funds.
Available.
These are the things. Even fixed income mutual funds, you understand, which is for steady income. But for hedge, you can consider real estate, equity, dollar-denominated, foreign currency-denominated funds. That can then give you the right hedge.
Okay.
But for money market mutual funds, it gives you steady income at a very low risk. And most importantly, it's better than savings. Instead of you putting your money, leaving your money in your savings account.
Yeah.
So you quickly move it to mutual funds account.
And you can get it for as low as 5,000.
Yeah. It's very good. Instead of earning, not trying to demarket the banks, but I'm just
yes.
So instead of leaving it there, maybe at 5% or thereabout, you can move it to money market mutual fund. It's safe.
In fact, I'm going to
the only thing that will change there, especially the money, is the interest, the yield you will get. But your money is still there.
It's still there. Yeah, so I think I'm actually going to jump into it immediately after this. And I hope we've been able to clarify and let you know, inform everyone on how to invest in mutual funds in 2025. And I think it's also a very good time because of, the yields performance. So we definitely encourage you to go down that route, try that piece of investment. And we also did, something on treasury bills a couple of weeks back. You can also catch up with that on our YouTube page. I think is one video you need to watch so you get a better understanding of this as well in comparing treasury bills as against mutual funds. So Idika, thank you very much once again, for shedding more light on this, and we hope this conversation has been of great value to everyone. Don't forget to catch up with us on Spotify, subscribe to our YouTube page for a lot more financial conversations and how to make money. And we'll call it a day. My name is Wogeva. We'll see you next week. Bye.